Welcome, everyone. Welcome to our first founder spotlight featuring Kibby Pollak from Enurgen. And this whole session, everyone, will be a very direct and honest conversation with Kibby and myself, where the aim is to extract valuable lessons for all the founders and investors listening in. Before we get to that, let me just quickly introduce myself. I spent 9 years as a managing director in Techstars. I would say the 9 best years of my professional career. I'm happy to say so. This includes 6 years leading our Equinor and Techstars energy accelerator in Norway, 1 year leading our Paris sustainability program. And currently right now, I'm focused on setting up a new program in the Middle East, and more specifically in the Kingdom of Saudi Arabia. In addition to being a managing director, I also serve on our investment committee alongside Techstars CEO David Cohen and our founder, Brad Phelps. Enough about me. We have about 35 minutes today for conversation, and we plan to have approximately 10 minutes Q&A towards the end. We'll monitor questions, so please feel free to ask questions, and we'll try to get to 10 minutes towards the end, but it depends how interesting the conversation goes, if it's going to be 5 minutes or 50 minutes towards the end. So with that, setting the stage a little bit more, today we are really here to talk to Kibby and to learn from Kibby and his journey. And we are here to talk about 3 different areas, or 3 topics that I know are on the mind of any founder. I will try to extract learnings from your investor conversations and your customer conversations and how you have scaled Enurgen. So before that, Kibby, again, welcome to the conversation. So thanks for being here. Please tell us a little bit more about yourself and why you started Enurgen.
Hey everyone, great to be here and really excited about the conversation and going to be as candid, as possible. And a little bit of background about myself. I'm an engineer by trade, electrical and computer engineer, and then I have a master's in power and sustainable energy systems engineering. I'm a serial entrepreneur. I just love building products and selling them. And Enurgen is my second company that I've now started. My first one was in a totally separate space. I have lots of war stories. It was a hardware company that I bootstrapped from my basement. I built thousands of electronics devices, shipped them globally. Went through the ringer during the supply chain crisis, went back to school. And then, I started Enurgen thereafter, which is in a completely separate space. Enterprise software, obviously learning the hard lessons in hardware. I'll never touch hardware again. So now I'm purely in enterprise software, and I'm figuring out this space. It's a completely different sell. Went from B2C hard tech to B2B enterprise SaaS. So totally separate, learning tons of new things. But again, taking a lot of learnings from, bootstrapping my own company to now kind of a venture-backed company, and selling to a completely different clientele, with deal sizes that are, insanely large compared to what I used to do in the hardware, B2C space. So it's a little bit about me, but happy to tell you about my story from start to where we are today.
Thank you, Kibby. But as you remember, you learned this also in the Techstars program when I met you in 2023. What is it exactly that Enurgen does, and why is it important for customers? And please explain it to everyone like you do it to your grandmother, right? So everybody gets it, please.
Okay, yeah. So what Enurgen does, so I'm sure everyone's familiar with solar power and potentially solar power plants. So, for us as a company, we work on large-scale solar power plants. So these are power plants that are in the middle of nowhere, hundreds of thousands of modules in a given location. Sometimes if you're in a plane and you look out the window, you might see this massive array of solar power. That's exactly what we work on as a company. And so what do we do is we're hyper-focused on building energy yield models. So when a solar designer and engineer is designing these plants, they need to understand, given this plant design, this is going to be my energy output for that given design. And so that software that runs and calculates the energy output for them is our software. And it's used heavily during the design phase. It's used in the construction phase of these power plants all the way into operations, where our software is working with their operations teams daily to ensure that these power plants are producing their optimum amount. So that's in essence what we do. Why does it matter? Is because of energy yields. So energy yields for these large scale power plants directly equate to revenue. And the most important thing for everybody here, if you're all founders, is revenue. Revenue is everything. And so our software directly touches revenue for our clients. We help them increase the rates of return, which, if you're pitching to investors, that's the number one thing as well for them is rates of return. So we always speak to value add on the revenue side, and that's particularly what we do. So, yeah.
Thank you, Kibby. So let's move on to your financing round, and let's talk about the recent round that you actually have closed. So tell us how much you closed recently, and also if you can disclose some of the investors, and please do. If not, then keep it more general.
Yeah. So the investment journey is, I'll just be blunt, it's a very tough journey. It's no easy thing to do is to raise a round. And every time I go out to raise capital, I've always been told this is the hardest time to raise funding. So it seemed like this has been time and time again, but we've made it happen. We've recently just closed a seed round where we raised about 4.12 million USD. And before that, about 2 years ago, we raised a pre-seed round of about 1.2 million USD. So we've raised over 5 million USD in total. And we just closed our seed round in August of this past year. And we're a Canadian company. So this time around, we got lots of great Canadian investors, which is, BDC, Brightspark Ventures, Diagram Ventures, and then Mars IF. So I'm happy to speak about this journey. I've learned a lot, but that was kind of the recent updates in terms of the funding round.
And Techstars. That's also good to know.
And Techstars, yes. Thank you. Sure. Of course, Techstars, yeah.
Which is great. So I know firsthand, Kibby, that convincing investors is really tough, right? You also mentioned, right? And you probably need a list of 100+ investors that you start to and reach out to in order to get closing, right? But what do you think stood out about your company in the fundraising conversations?
Yeah, okay. So first off, I want to just say raising funding is incredibly tough. I mean, it's not an easy process. It absolutely sucks. It's brutal. You have to get used to a lot of no's. So you really got to build some thick skin throughout this process. And I've probably pitched to almost 1,000 investors by this point, I think, around the world. And I've gotten like 99% no's, obviously. Only a few have said yes. And this has stemmed from my, my early days with my previous company all the way up to this company. And so why, why have they invested in us? And I think I can give a couple perspectives. One, because I started a previous company and I've only got nothing but no's, but now I've started this company and I've got yeses. So I can tell you why I got the no's in my previous companies and why I've got the yeses in this company. So in my previous company, there was a couple of key things. Timing is a big part of closing a round. And so, particularly you always want some tailwinds that are helping you push along from the market perspective. So the market that you're operating in is really important. That market size, your total addressable market, what does that look like moving forward? Is there explosive growth going into this industry? Is it an exciting new industry? These are things that, unfortunately investors, are following that hype train and they're all kind of, getting onto that. And at the time, when we started the company and spun our technology out of the research lab, solar power was incredibly, with the IRA in the United States, there was just a huge global movement to renewable energy. And so those kind of tailwinds that, were essentially just creating a lot of interest in venture, that they were already interested in the space. And so that helped us. They're already looking into solars. They're already looking into, unique plays in that field. Now, obviously, when that happens, there's a lot of other companies, there's a lot of other startups that are being formed at that same time, and you guys are all competing for investment capital as well. And I think one of the things that really helps with this current company is the level of depth and the technology, and so that gave us a clear competitive differentiator. Where our technology came from a research lab. We spent over 10 years of R&D. That was a research lab I came from, my co-founders came from. And so we had that credibility as founders to be in the space. Like, why do you deserve to be here and operate? And why do you deserve to win in this market? And that was part of the reason. The other part of the reason is that I already failed. So I had another company, prior to that, and I built it, I scaled it, bootstrapped it. And so, I knew how to build a business. I've learned some hard lessons. And so not only were we the appropriate team for the industry, but we failed and we learned from that and we learned how to get better. And so, it gave them more confidence into saying, hey, these guys know what they're doing, and we're willing to take that bet. So I think it's a combination of multiple things why we got the investment round done, which is, failure, having that experience, losing some hair over it, losing a lot of sleep, having the credibility as founders, why you're the ones to go win. And then two, and then the third thing is having that market kind of tailwind, lots of growth, lots of excitement in that industry. And so all of those three things, helped. And I think the last final piece, from the CEO pitching the company is you got to be excited about what you're doing. And investors see that if you're excited, you love what you're doing, you're super passionate about it and you tell it that way. I think that's kind of the cherry on the top that really helps get them over that finish line to get them to want to invest into you. Because at this stage, they're investing into the people, and the teams that can succeed. So, yeah, a long answer,
Thanks,
but I hope that answers it.
Thanks, Kibby. I think one learning, the key thing I have heard from that part was actually just the sheer numbers, ladies and gentlemen, that you have to talk to when investor point of view. I mean, I would say you have to talk to hundred companies at least. Kibby mentioned close to 1,000, right? It is, you have to be persistent here. You have to never give up, right? You have to just jump up again and be positive and going to a new meeting with an investor with the same positive energy as I did with the last one. And this is actually a trait that I, as an investor, look for in founders, that you have that stamina to go all the way, right? Because it is, I have to say, it is a shitty job to fundraise. Sorry, I don't think sure I can use that word, Techstars, but it is true. It's super hard. It's lonely as a CEO also, and it's more as a full-time job. So I'm glad you said that, Kibby. That's a clear learning from today. You need to talk to a lot of investors and never give up, which feeds me straight into my next question, actually, my next topic. And that's actually about storytelling, right? Because you mentioned it. I mean, your company is actually quite complicated. You have a lot of PhDs, a lot of tech and IP, and it's actually really hard to get lost in the details. What you do, Kibby, is very advanced. And the more advanced and more hardware and more everything is involved, the more important it is storytelling. So how important has also the storytelling during also what we pitched you, right? And we helped you create, right? Is that even more important in a complicated company like your own, or would you still say that storytelling is vitally important for any founder?
Yeah, I think for any founder, storytelling, is vitally important. Whether it's, essentially pitching to investors, whether you're on stage doing something, whether you're talking to enterprise customers, it's all about storytelling. And look, I do a lot of sales nowadays, and I absolutely hate sales. I'm an engineer. The last thing I want to do is sell or be sold to. But here I am. I'm selling full time, whether it's raising capital or enterprise software sales. And what helps me get through it is I tell it like a story. This is my view on the world. And essentially, this is why what we're doing matters. And this is why you should care. And that's exactly what we do, on the investment world, is that we have all this deep technology, but ultimately, like, no one cares unless you get through why should you care? Why does it matter? Why should we invest in this? And so, despite what you're doing, you got to really tie it back to that value that you're providing. What does that future look like? With what you're doing. And the best way to do it is tell through a story. And again, that storytelling and being passionate about it is a big thing. Like, regardless of whether it's a customer or an investor, when you're telling that story, you got to love what you do. And it's evident when someone's faking it or when they're actually passionate about it. And it's such a critical piece. So when when I think about when we're raising the investment round and I was thinking about how to pitch the company, I was always thinking about, okay, what's the best way that I can get this across to any given person? And then also accounting for things like, before I'm jumping on the call, I'm always looking to understand how involved are they in the market? Do they know the market really well or do they not? And that will change how I craft that story, and I have to do it dynamically. And so understanding who you're talking to is also very important, and pivoting your story around that specific person. Because sometimes when you're pitching to investors, you have to explain the whole market and why you're the winner, why the technology matters, versus someone who's, for example, in my space, who is already understands the renewable energy industry. They already get it. They've already looked at hundreds of companies. You got to focus on that specific technology and why that matters above anybody else. So there's things that you got to do and pivot on different calls. So you got to come prepared. You got to have a good story. You got to be prepared to pivot on that story based on who you're talking to, and be incredibly passionate about what you do, and build that credibility. So that way, at the end of the call, there's that interest. You're credible. You have the technology to solve the problem. You're driving true value, and they believe in that. And that goes for investment and sales.
So you're actually saying that that you understand the person that you talk to on the other end, even as a video call or a call, his or her background, and try to pivot the story and your company into being even more relevant for that person. That's what you're doing every time you pick up a call?
Correct. Yeah. And, yes. So for the most part, especially for customers, as long as there's a good problem solution fit on the customer side. Now, on the investment side as well, sometimes there's just no problem solution fit, or there's no investor founder fit. That is perfectly fine. Like sometimes, and you also have to realize that there's some investors that are just trying to get market information. And you have to also understand that and pivot accordingly. Right. And so, when you're going to raise money, you also want your ideal investors, and you want to be involved with investors that actually understand your market too, and can provide value to yourself. So you also need to, like going into those calls, you got to really understand who you're talking about and pivot based on what you're discovering. You got to ask a lot of questions in that first 5 minutes to understand, are they genuinely interested in your company and what you're doing? Are they getting market research? And what is their background? And then you can then pivot.
Great. I love it. Thank you. Can you share one pivotal meeting that actually really shaped the trajectory of your fundraise? I mean, maybe you had a big check coming in early that filled off half your round, or you just was a powerful company. Can you just try to help us understand if it was one meeting you kind of changed the trajectory of your fundraising?
Yeah, I'll speak to the most recent round. And so, yeah, there's definitely a moment. The challenging thing, like when you go to raise a round, the hardest thing to do is getting that lead investor. That's like the most challenging thing, because once you have that lead investor, they're going to help open the doors for you to get that round filled. And so that's definitely the most difficult part. It's the most gruesome part. It's the worst, and it sucks. You get 1,000 no's and before you get a yes. And then how you get to that yes is really important in that pivotal piece. And for this specific round, I remember, there was this investor. They weren't, they're really interested in the market, but they were building, their thesis. They were getting familiar with their market, but they didn't have that core, foundation. Like they were still learning a lot, and that gave them, I could tell that they were interested, they believed in us, but they were still hesitant about the market just because they weren't operating in it fully, this specific investor. At the same time, I was talking to another investor, which is, you always have to talk to multiple investors at the same time. And they had the credibility. They understood the market really well. And they knew everything about that market. And they were just like, they understood completely what we did. And so what I realized is that both of those two investors invested in one company. So they were co-investors when I looked at their portfolio. And so I brought up, to the one investor that was still trying to get confidence. I said, hey, do you know X investor? And they said, yes, we do. I said, oh, well, I'm chatting with them. And my hope was that they were going to get together because, they would get confident based on what, this other investor knew about, about the market and the industry. And that's exactly what happened. And so, I had the awareness to know that, okay, this is where they were struggling on getting conviction. And then I knew that, okay, how could I tap into that network, whether it's my network or the other investors I was talking to help get them, the conviction that they need. And the other thing you can do is just explicitly ask them is like, hey, where are you struggling to get conviction on the company? And that way you can understand, and you got to ask those questions to know how to solve them. And that's really what happened here. And that was that pivotal moment. I understood where it was, where they're struggling. And then I figured out a unique way to get others on board to help them get across that finish line. And that's the challenging piece.
Great, Kibby. Great. But do you also use the investors that have signed up early as referrals, and you actually ask them can you introduce me to 2, 3, 4, 5 others that you typically like to invest with? Did you also do that actively?
Yeah, so obviously, we had the luxury of having a pre-seed round done before our seed round. And so we had a lot of support, going into this round in terms of like, here's a list of all of the investors in our networks. Here's a strategy where we're going to target 20 investor intros a week, and we're going to do that. And my full-time job is I'm doing nothing but talking to investors for this next, 30, 60 days. And it's 20 a week, and you go on that list and you keep going through and you go through all the objections until you finally land, a lead investor. So we had the luxury of getting help on that. Actually, but some of that is that while you're still building the company in between your rounds, you're still talking to investors. And actually the investors that came on was not because of introductions through our existing investors. It was through relationships that I kept building, as I was building the business in between our rounds. So it's really important that you also do the work as a founder and not rely on your investors, to make sure that, you're selling your company, you're building interest in your company, what you're doing is exciting. And when you're saying you're not raising right now, but I'll be raising next year, they're keeping tabs on that and they have that FOMO. And so you want to make sure, you're still running the process regardless of whether you're raising or not, is really, really important. So yeah, that was a little bit about the process.
Great. My time is flying when you're having fun. So I think we actually have to move into, we can come back to this later on in the Q&A section, but have to move on to the customer side. I mean, one side of business is, of course, raising funds to operate. The other side, and maybe even more important, is actually to get paying customers, right? And actually getting revenue into your company. And your customers are typically very large, very complicated, typically very slow organizations. What strategies did you use to build internal trust? And how do you identify your internal champions, right? Inside these large energy majors all over the world. And if you can share the names of the one you're working with, Kibby, please do. If not, then just keep it general.
Yeah, I'll keep it a bit general, but we're dealing with
Totally
multiple large enterprises, and they're all been unique. And it's actually funny, a lot of the stuff that I've done in terms of investment, raising investment rounds, it's a very similar process in enterprise, sales. But you have to talk a lot more in depth about the technology, but you still need to tie it back as to why it matters. And the reason being is that, like, when you're in enterprise sales, there's multiple stakeholders that are involved, some of different levels in the business, some that are focusing day to day that are going to use your software. And then there's the managers that are higher up that they really don't give a shit. They just want to see their team hit their metrics. They want to do better. They have their internal things. So they care about the business goals. And so similar to, when you're talking and pitching to investors, you have to get the value across to those proper stakeholders, but then you also have to have the ability to go very deep and technical to those people that really matter. And so, enterprise sales is very, very challenging. There's long deal cycles. It sucks. You have to get many stakeholders on board, but we've dealt with many large enterprises and they've all moved at different rates. And that's been the interesting piece for me. And that's where I've learned that, hey, some of them have their hair on fire. And despite being a large organization, if their hair is on fire, they will move you through procurement in like a week. And that's a critical thing that you need to figure out. Is there a serious problem and are you solving that problem? And then you're going to get through. If your problem's kind of a nice to have, like if you're solving, a nice to have, then it's going to take forever for you to get through procurement. And that's also happened to us where, they know that this problem exists, but it's not their number one issue. And so you get through this whole cycle where, you have to get others involved and you have to kind of do a lot more selling to get a deal to close. And you're still going to be stuck in these long deal cycles. So we've suffered from both. And it's really important to discover, who those stakeholders are, who's your champion, is there a hair on fire? And then how do you capitalize on that hair on fire? And then if not, how do you create urgency, in order to drive the adoption of your software? How do you create value? And then how do you get other people to buy in? And then just one last note is you just need to ask the right questions. Like, who's got budget? Are you the authority, on the account? And if you're not good at sales, you don't really ask that, but you just got to bluntly ask, like, hey, so is the final sign off coming from yourself? Is it coming from someone else? I'm just curious just to understand the process. So you got to ask that question so you can understand who you need to now convince, and go after them essentially and say to help get this deal to close. So these are things that I've learned over the last year and a bit. It's been challenging.
So you actually go into meetings and ask these specific questions directly. I know for a fact that many founders feel a little bit uncomfortable being so direct, right? But you are saying that you just have to, right? You have to ask the questions in order to peel off the onion layer, so you actually get to the decision makers and you get to the people who actually have budgets. That's what you're saying, right? More or less.
Exactly. Yeah. And I hate being salesy and I hate doing that. I mean, I'm Canadian. We're known for being super nice. And so some of the things I hate being pushy like that, especially because I'm an engineer and I hate being salesy and asking those directly. So I always try to bring it into the conversation when appropriate. So it doesn't feel like it's coming out of left field and I'm putting people on the spot. And you also need to understand when to ask those questions. Sometimes, if there's 10 people in the room, it might not be appropriate to ask that question when you're putting that specific person on the spot. So sometimes you got to do is build that personal relationship after, and there's many different ways of doing that. You could be, texting them, messaging them on WhatsApp. You could be flying over into their offices saying, hey, I'm in the area. Would love to get a coffee with you. And then that's the time to do it. And that's a lot what I do is essentially be like, hey, I'm in the area. Love to get coffee. And when we get coffee, we get that candid conversation going. And that's when it feels more natural to ask that question. And so you got to get unique with it. And again, being in person is always good. So if you're working with an enterprise customer, really try your best to just get in person with them. That's when you start to learn more about their processes. And it all comes out over a coffee. It'll never come out over a Teams call. So you got to be in person. And that's what I recommend for enterprise accounts. Yeah.
Just trying to extract some learnings here, ladies and gentlemen. I mean, we had the first one around fundraising earlier about the numbers of investors, and now I think Kibby is also touching on something very important, and that is basically that customers aren't just a large company; it's actually individual people within a company with real problems, right? And you have to help him or her solve the problems that he or she has every day, right? And I think that is what Kibby does, right? He meets them for coffee, and that's actually a very good sales approach, and try to build the human connection and actually trust in order to create internal champions, right? More or less. That's
Correct.
also what you are. Yeah, exactly. Yeah.
Yeah, and you got to put yourself in their shoes, right? It's like
Yes.
if you're an enterprise SaaS and you're going to ask for $100,000 deal or $200,000 deal, whatever that is, and you've never met the person in your life, that's a lot of risk that someone has to take on a decision without even knowing you. And, that's a lot of trust that they have to put in you. But when you build that human relationship, it's easier to establish that trust because they know who you are. They know you're willing to fly over there and have a chat with them. And so if there's a problem throughout this process, they know you'll be there to solve that. So that's another important part is that in a deal, there's times when you need to sell and there's times when you need to de-risk. And you need to know when that is there to help get this deal across the finish line. And those are ways that you can help do it. Yeah.
That's great. Great learnings, Kibby. Thank you. Thank you very much. Again, time is flying here, so I think we can come back to this also later on. But I have to ask one final question about your customer side, similar to the investor side. But you also work with your complicated customers to get leads from them into other, similar maybe daughter companies or partners they work with, or is this completely kind of one-off every time you talk to the huge energy companies of the world?
Yeah, So for what we do, it's a very complicated sale. I mean, I think just enterprise sales in general, it's very complex. Especially in the energy industry. I think if you're in the energy industry, you're dealing with complicated sales cycles because, you're dealing with a core piece of critical infrastructure, and there's many different, things that essentially are relying on it. So, but yeah, I think circling back to the question, how do we navigate within these organizations? And that's something that, to get in the door is one thing, and then to expand in that customer and that group of customers or let's just call it sister companies, is very hard. And so one of the things that we do initially is we fight like hell to essentially get an initial deal, and essentially not really caring about the revenue in the initial deal. Just get in the door, build the dependency, build the trust, and then focus on expansion. And that's a large part of our strategy, is just do what it takes. Even though we're losing money, we're doing it because we're trying to build that dependency and we're focusing on that expansion. We're learning about the account. We're learning how that business operates. We're learning their core problems and learning how we can pivot that problem to solve those core problems. And is there other companies that they have that they work directly with, and how can we get that solution across the different business units? And so there's a lot of times where you have to have these conversations saying, hey, well, this also, if you're dealing with this problem, is touching not only your business unit, but this business unit. We would love an introduction to this other business unit so we can talk about it. You've already built the trust. So when it comes internally, into a different business unit, they're going to essentially get on a call with you. And so you got to, again, trust is a big part of this. You got to show your value. You got to build the trust. And then you can ask those questions saying, essentially, hey, we would love an introduction. And of course, they know you. They would be willing to introduce you to other, whether it's satellite companies, other business units. And so you can navigate from there. But you got to build value, and you don't have to optimize over your revenue right at the beginning. But you need to show that there is a path to getting to a larger deal, and that you're actually working it, especially at the early stages of your company. Yeah.
Great. I think I'm going to move now into the scaling part. I mean, how you're growing your company, but you touched on some of these points already. But what has been the most, the hardest or most significant barrier to actually scaling your solution? I mean, you want to get into the door, but actually to get multiple and large contracts, scaling it. What has been the kind of biggest barrier, and how did you overcome it, Kibby?
Yeah, I mean, and we're still overcoming lots of things. I mean, I don't think, as you scale, there's always new issues at every phase of the business that you have to overcome. And, one of the things I think I just want to get across is everything we're talking about today is not easy. So you need to just cement that in your mind, whether you're fundraising, whether you're trying to close your first enterprise deals, whether you're scaling. It's not easy. Excuse my language, it fucking sucks. It really does hurt. It's painful. But you gotta be ruthless. You gotta be relentless. You gotta believe in your dream and never give up. And then the scaling part is, I think the critical thing is like finding product market fit is very challenging. And that's something that you have to be ruthless, relentless in. Like you as a co-founder, as a CEO, CTO, et cetera, whoever, you need to be on every customer call. You need to be asking them what their top 3 problems are. And if you're not solving those problems, maybe it's not the right customer, but you need to be talking to people and you need to be solving those top problems, those hair on fire problems. Is your product doing so, or is it not? And that's part of finding product market fit. And so, if you do that and you have this cycle where you're continuously asking about those problems, are you solving them? Is your product solving them? And can you get those deals closed? Because essentially, if you're identifying those problems, you're solving them with your product, you can close that deal. Now, if you're not solving the problems, nothing's ever going to close. And so you need to figure out how to iterate on your product to solve those problems. And, and then again, consistently iterate on who you're selling to, et cetera. And it's this kind of endless machine that just really never stops. And that's how you get product market fit. And then once you have product market fit, then it's just, scaling, and it comes to sales teams, processes. How do you get all of this stuff that's in your brain, your co-founder's brain? So that way, a new sales hire can do that. And that's another challenge. Hiring the right people is very tough. And so, they're never going to pitch the product like you are. And so you got to be very relentless on who you hire, your processes, how you want people to be pitching the company, the product, and they got to buy into that. And so these are all very difficult things, and hiring the right people is very important, and or else you will never scale. And so, yeah, it's tough. I'm still learning a lot about it, and it's changing as the company grows, right? And so every day is different, and yeah, and every scenario is very unique, I will say.
Great, Kibby. And that leads into my next question perfectly, right? I mean, how do you actually attract and retain spectacular talent when you are growing that fast?
Yeah, it's another good question. So I think one thing is if you're solving those core problems, right? Then if you're solving people's core problems, then they really become champions for you, and they help, essentially saying, if if I have this problem, other people have this problem. And then when they're chatting with other people, they're also saying, hey, have you spoke to this company? They're super interesting. They solve this problem and I love working with them. And so some of those, some of those customers actually can become great employees. They would actually want to jump ship and come and join your company because they love what you do. They believe in the problem. They felt it. Those are really good early employees, to get onto your business, and they can get that vision across. But I think the other important thing is the passion piece. When you're talking to new hires, and I think when you're talking about what you're building and you're passionate about it, people see that and people want to be part of that. And so I think you always got to be excited about what you're doing. You got to get that across when you're hiring people. You say, hey, this is what we're doing. And, if you're not, and you got to ask them, if you're not aligned with this, if you're not excited about this, and then maybe this isn't a good match. And you got to just say this bluntly. Because you want to be respectful of everyone's time, your time, their time. So you got to ask those questions. You got to be excited about it. And I think this whole wheel just keeps turning, and it draws in a lot of people that then get excited about what you're doing, and word spreads locally. And so it's just something that you just can't stop. Keep the energy up, and it builds on itself. Yeah,
that's great, Kibby. But please take care of yourself as well, right? It's really important. Yeah. We're actually coming towards an end. I never thought this would go so fast, to be honest with you, ladies and gentlemen. I guess that's how it is when we're having fun. But coming towards the end now, looking ahead for Enurgen, right? What's next for Enurgen? What are you really excited about in the coming year and years?
Yeah, I mean, what's next? It's at this stage, it's everything is revenue, everything's about revenue now. For us, growing, scaling, revenue, like all of these things is about revenue. So for my core focus, that's everything I've been, focused on is enterprise sales, revenue. How can I get the team to align? How can we increase product velocity to deliver more value that can help us justify charging more, right? How in our sales cycle do we get better at speaking to that value? So that way, when we're talking about cost, I can say, hey, it's a $600,000 deal. You guys are going to make $3 million. So charging 600K is nothing for you guys. How do I get better at getting that across? And then how does that scale just beyond myself, right? How does that scale to the rest of the team that I'm hiring, that they can now navigate this? And all the way from top of the funnel to bottom of the funnel, how do we get that get that interest in new leads? How do we get that value across from those first calls? And then how can we drive to close as fast as possible, get that value and get them confident with essentially, moving forward with ourselves and closing on a large deal. So I'm hyper focused there. All I care about is revenue, and obviously our team and employees to help us drive to that goal, and getting alignment across our entire team is everything I'm focused on at this stage. Yeah.
Great, Kibby, great. So we're soon coming to the Q&A section now, but just one final thing here. If you could ask the audience here that is dialing in here today, if you can ask them for one favor or one thing, right? What do you need, Kibby?
Well, that's a great question. You know what? We're looking for really good software engineers. So if anybody knows really talented software engineers that have worked in the energy industry, those are very rare to find. That's what we're looking for, as we're scaling out the team. And again, anyone on the enterprise sales, if you have anyone in your network, please send them my way. We're hiring and looking for really great candidates and employees. So yeah,
that's great. That's great, Kibby. That's great. And if you can't find Kibby, then you can always find me or my colleague Rad, and we'll forward the information. Right? But that's a great ask. So with that, actually, we're gonna go into the Q&A section, and my great colleague from Saudi Arabia, from Riyadh, will run that one. Rad, so do you have any good questions?
Actually, we have so many questions, and we have very little time left. So I'm sorry if I skip any of the questions. I'm trying to, as much as I want you guys to stay forever, but I guess we have to close on time. So I'll go with the first one. Outside of straight cash, what were other key strategic supports you looked for from your seed stage investors? And did their support unlock anything that you did not have access to before?
Great question.
Yeah, that's a great question. Cash is one thing, but getting the right investors are also very important. Now, you have to be in a scenario where you can pick and choose. That's another difficult thing, right? If you only have 2 months left of runway, you're running out of cash. You don't really have that. You can't. You'll take whatever you can get. So these are things you got to consider, and revenue is a core driver where you can get into that. If you have really good revenue and strong growth, then you can make those decisions of those right investors. So it depends on where you are. But ideally, in an ideal world, you get the right investors that have been in the industry. And those are typically, those that will actually invest in you, is that they really get the market that you're selling and they really understand the pain point, and they can open doors for you. And actually, in our case, we are fortunate about that, is that most of our investors really understand the industry, whether that's enterprise SaaS or the energy industry themselves, and have been there and financed these power plants and really understand those pain points and how the market works. And from there, they've actually been able to open doors for us, give us intros into new enterprise clients that we might not have got. And at this stage, that's the most important thing for us. And they can really, when we talk to the investors, we talk about our problems, we can actually spar, with those problems, and they can provide valuable insights other than not really knowing what's going on and saying, hey, where's your growth? Where's the revenue? When we're talking about the issues, they truly get where we're coming from. So ideally, if you're in that world, you can find someone that's experienced these problems, like get the market, get what you're selling into, and they can be really good long-term partners. So that should be, the investors that you're essentially optimizing for in the beginning of your fundraise, because that'll make it easier as well to get to, a lead investor. You don't have to do a lot of convincing. It's easy for them to get conviction in your market. So these are all important considerations.
Awesome. Audun, what do you think? Do you still have time, or?
Yes, we have time, or unless my other great colleague from the US, Jessica, will kick us out. But we still have a few more minutes, right? You can stay.
Okay.
I can stay longer too if needed.
Yeah, still a few more minutes. Go for it, Rad.
All right. So you have a question just popped up from Eric. How did you structure your early raise in terms of valuation and investor alignment? Did you prioritize strategic value or pure capital?
That's a great question. And it was a little bit of both. Like we prioritized. So I would say in the pre-seed round, we really prioritized to just getting essentially a term sheet. That's kind of the biggest thing that you want to do, is try to get to that term sheet as fast as possible. So that way you can start to build some FOMO into the round, because the second you get a term sheet, everything flips in terms of round dynamics. So you just got to do what it takes from no matter who to get a term sheet. And then the dynamics change, because now, that person who sets the valuation, now you actually have negotiating power. You can create more FOMO with new investors that will help bring in other terms that might be more favorable for yourself. And then you can start to pick and choose for those who's going to be more strategic. So, you got to build that hype into getting up to that term sheet. If you think things are getting close, you need to start building up that FOMO with other investors to get them to push to that term sheet as well. So that way you have competing offers, and then you can then optimize to who is going to be the best strategic partner. Because you got to understand who's at the table. If there's no one at the table, then you have nothing to really negotiate against. You don't have a selection of who's actually going to provide value to your company. And so I always say is just try to drive to that term sheet, get those initial terms, get an offer on the table. And then you got to really run like crazy to get as many as possible. But you got to start building them all together so that they all try to align. And then it'll be competitive, and then you can be in the driver's seat. Until then, you're not in the driver's seat. So do what you can to get that term sheet. And then, whatever valuation is set, it's a negotiation process, and then that can start. So yeah, I've got more to say, but I also know that we're close on time, so I want to be cautious of that.
No, honestly, I think it was very clear, and it's a great advice, honestly. There's a question here for Audun, I'm assuming. So, Audun, climate tech seemed to peak in 2021 before AI boom grabbed most of the spotlight. For founders raising now or today, how do you see investors' interest in climate tech compared to that period?
Great question. And I guess that person is right. It was more trendy before, but honestly, if you have a good solution in the climate tech space, decarbonization is still on everybody's agenda still, right? Just to be brutally clear. And I'm so happy it is like that. It hasn't stopped at all. Money is piling into this sector regardless. people don't talk about it that much before they announce deals in the sector, like publicly, and a lot. Today, it's just happening. It's actually a new word I learned from one of our spectacular founders, a unicorn in the climate tech space. He used the word green hushing, which means that you have a green deal, but you don't talk about it. Before, in 2021, it was just opposite. Everybody talked about it. Now it's just, you just do it and really don't talk about it. It's actually fascinating. So long story short, there's still plenty of money available, plenty of investor money available and interest for good decarbonization deals, for sure. Absolutely.
Yeah. I've seen that too, actually.
Yeah.
Just speak to the
Really.
value. Like, it's all about value. Yeah, you don't have to speak about the green part of it, but if you're providing value in the world, people will back that.
For sure. For sure.
So I think I have the last question just because of time. And this question could be answered by both of you, so it'd be great to get two perspectives. So, and it's actually meant for you, Kibby, but I think also Audun has a perspective on this. So do you recommend targeting climate tech energy specific investors who understand the sector, or do you think there's still value in talking to generalist investor? And there's a follow-up to that, which is, how did you draw the line between persistence and being annoying when you were being pushy? I think that kind of goes back to the question that was asked before.
Audun, do you want to start with that one?
No, Kibby, you're the most important person, so you go, please.
Yeah, I think in the beginning, obviously it's easier to speak to the energy and climate tech investors. And I definitely think, you need to be speaking with them. But at the beginning, when you're trying to get that first term sheet, you're trying to get a lead investor, you talk to everybody. Talk to everybody. You don't, essentially say, hey, because they're not climate tech, they're not worth my time. Talk to everyone. They all have very deep networks of appropriate people. Like, if it's a generalist investor, for us, they knew people that actually own solar power plants, and they're going to get on a call and talk to them. And so, or if not, they would tell you, and they're not going to waste your time because they don't want to waste their own time. So, in the beginning, you really do have to talk to everyone, and you can't discount anybody unless they specifically say, we only invest in enterprise SaaS, and you're a hardware company. Then you're wasting time. But, if they're in the area, if they're a generalist investor, you talk to everyone in the beginning. Obviously, your conversations are going to be very different from a generalist investor to an energy specific investor. And you need to know how to have those conversations between the two. Like I was saying earlier, one, you got to be more high level. You got to do some market education. Like, you got to educate in your deck, versus on the other one, you got to speak more to the value and why you. And so you just got to handle them differently, but you need to talk to them all. It's all very important. Yeah.
It's a short follow on Kibby. It's spot on, but I think also an important thing here is that a lot of investors are, what you call co-investors and follow-on investors. So if you have a deep tech solution that has patents and require R&D before it becomes a product, if you have a industry or a sector-specific investor that gets into your round early, it can probably unlock a lot of generalist capital around it, right? Because they basically do the due diligence for the follow investors, and that can just pile a lot of money into your round, just to be clear. So that helps a lot. Yeah.
Yes.
Absolutely. Yeah. I think, it's actually good questions. So I'm going to take notes and use some of these questions for our next session. And again, we're actually going to have a new session, December 9th, for everyone that would like to join. Information will come out, and we will be joined by our incredibly crazy, passionate founder, Kevin Norker from Ampere, electrical hybrid aviation plane. And they are now building a new category-defining company around electric aviation that actually works. It's absolutely fascinating. That's happened December 9th. But today, I just want to, say a deep thank you to Kibby. Knowing and working with founders like you, Kibby, is that's what makes me having the best job in the world. I mean, it's so great to work with people like you, Kibby. It's an honor to know you, and it's an honor to support you, Kibby. So with that, thank you a lot, Kibby, and thank you to Jessica. Thank you to Rad for monitoring and helping out with the event. And you can always find me and Kibby and everyone. I mean, any founder that wants to find us, you will find us, right?
Yeah.
That's not too hard. Yeah. Thank you all. Thanks a lot.
Thanks, everyone. Bye-bye.
Thanks.